Yeah, welcome to the Anemoy pool party. And thanks, Orhan, Centrifuge Governance, for hosting us here. We, Anemoy, came out with a proposal, a pool onboarding proposal called POP. You could find it on the forum. The Centrifuge Credit Group. Mark, I think, is here on the call, has published a review, and now we are here at the pool party. I would like to present a little bit the team, what we are doing, what we are aiming for, and of course, mainly spending the time on the POP. So really the proposal for the Anemoy Liquid Treasury Fund 1, and hope being prepared to answer all your questions. I think we have time for really also a discussion and a Q&A session. Anything I forgot so far, Orhan, or can I just continue and click through my slides?
You can continue and click through your slides. We are excited to hear more, Martin.
Perfect. Yeah, the disclaimer is important, and you can then stop the video and read it. Anemoy intro. So where are we coming from? So I think most of you know me. I was involved in Centrifuge before, being a co-founder with Lucas, so really thought about the idea how actually decentralized technology, so truly open permissionless blockchain technology can change the world. And at the early days, we already had, even before the name DeFi was invented, the guess that the financial system is most likely the easiest low-hanging fruit for blockchain technology. If you think of it as something where it's not just information traveling between counterparties, but where you have a decentralized consistency, basically a status in the protocol, and turn it from stateless into stateful, that gives you a lot of opportunities, like having decentralized ownership, transfer of ownership, and then with smart contracts even more. That brought me in. That kind of poised me for what I'm doing. But while we made progress with Centrifuge, building a great community, having you all joining, I think we kind of hear a lot of noise, but the momentum we are seeing in DeFi, especially if it comes to real-world asset tokenization, is rather slow. So a couple of 100 millions sounds cool. Maybe low billions sounds cool, but really compared with traditional TradFi markets, it's a drop on the stone. It's not recognizable. The issue we are seeing here is really, I would call it a circular dependency between two factors. One is investor adoption, and the other is the quality of the offering. And the quality of the offering needs to be in line with the investors. And of course, if you would like to approach bigger institutional like investors, the institutional quality of the offering has to be there. And that is something which needs to be provided, which needs infrastructure, and that needs something where actually someone helps TradFi to bring that into DeFi and onboard it into DeFi. And Anemoy wants to be among those parties opening up DeFi for TradFi investors, providing institutional quality assets. And of course, the first and easiest one is US Treasury bills, and make it accessible for DeFi. Next step would be, of course, also adding assets which are not just an offering where DeFi investors or native DeFi investors like DAOs, etc., stablecoin holders have an interest in investing, but also TradFi. TradFi, of course, because of the opportunity itself. So bringing assets on chain, which are actually representing something they do not have access to today. And where blockchain, DeFi, Centrifuge as a protocol actually provides the scalability and the transparency to access those assets. we have seen those assets, I think, in the past already on the protocol. I think what it needs to turn into is really institutional quality. Yeah, part of this, what we are doing, or actually we are part of something, and that is called Centrifuge Prime. It already draws, I think, a bigger picture where Centrifuge Prime is something where the Centrifuge DAO wants to offer a process and a set of investment opportunities or offerings with partners like us here, Anemoy, to the broader DeFi community and long-term TradFi investors, where Prime is really the umbrella for a portfolio of offerings. So T-bills with Anemoy, other pools and offerings from Anemoy will be part of it, but it will be a much broader offering, and we want to be part of that movement as well. And last but not least, that's why we are here. That's why I'm speaking along with my team here. Want to continue to contribute to the DAO and create the ecosystem we need to make real assets successful in DeFi. Any questions so far? Please interrupt me. A small group anyway, so just raise your hand, say something. Yeah, I have here a few fellows with me here on the call already. Maybe Colin, if you would like to introduce yourself, hand it over, unmute. I do not hear you. Maybe Jason,
How
if
about
you would
now?
like
Can you hear me?
to go first, and then you sort out the audio issues.
No, perhaps not. So I'll happily go. Good afternoon, everybody. I'm Jason. I met with Martin a few months back. I'm very honored to step up to a board role with this project. By background, very much spent my professional career in private equity. I'm been involved with a real estate private equity fund now for 20 years. It's called Patron Capital, and I'm still very much involved in that. Outside of my duties at Patron, and as it relates to the blockchain world, I spent 3 years working with a subsidiary of Binance, which I don't do anymore, but was an incredibly instructive 3 years. And outside of that, I'm very involved with a global NGO called the Blue Marine Foundation, which advocates for sort of global ocean protection. That's kind of my background. Happy to take any questions from anybody. Or not.
Colin, is your microphone working again? It seemed like there was some sound before.
You guys heard me, right?
Yeah,
Yes,
very well, Jason. Thank you. Colin, let's try if audio works now.
I think Colin had a few.
Can you hear me?
Ah, there he is.
Okay, cool. So everyone can hear me now?
Yes, we can hear you.
Seems like we're good. Okay, cool. Well, hey, nice to see everyone. Know many of you, and many of you have probably heard this story too many times already, but I've previously been with Victory Park Capital, Chicago-based alts manager, where I covered special situations and private credit for about 4 years and was effectively our DeFi lead for 3 of those years. As with many TradFi institutions kind of taking a step back from the industry post-FTX, I decided to kind of move into this space more aggressively, have been, here full-time since February, and have had the opportunity to join, these 2 gentlemen in developing what I think is a really cool approach to asset management enabled by DeFi. So really excited to be, here on the phone with all of you and driving this initiative forward with Martin and Jason and the team.
Thank you. Yeah, there's not much more I can tell about myself. So Maybe a little bit background on what I did before Centrifuge and where I'm coming from. So really started my career as a software developer, even if I have a degree in business administration as well, and really came into finance through the startups I had in the past. So the last one before Centrifuge was Taulia, global supply chain finance platform. We sold it to SAP, and that's where I also kind of tapped into I would most likely say alternative asset classes, where traditional finance was actually unable or doesn't really have the technology to tap into those asset classes and managing them properly, providing the transparency and the protection you need for on scale investment in those asset classes, like in financing a single invoice between, you know, a supplier and the buyer, for example. And if you look at Colin's and Jason's background, pretty similar. So that is also kind of, you know, giving you an outlook where we, of course, do not want to stop this pre-structured, rather simple assets like US Treasury, but also tap into alternative credit, private credit, and turn it into something where really DeFi will make a difference in the future, and really using Centrifuge and DeFi what it is built for, where the permissionless technology can really provide transparency and the scale you need for those asset classes in the future. That is what I'm believing in the long term. And thanks, Colin, Jason, for joining me here on this effort and going with me the very first steps with the Liquid Treasury Fund I would like to present now. Any questions so far, by the way? Then if not, would just continue and talk more about the POP itself, and then most likely having more than I guess questions, kind of going into the details of the offering. Then let me continue. Yeah, here's just an overview what the fund is about. I think there are a lot of tokenized US Treasury offerings out there, and the Anemoy offering is different in a few dimensions. You know, I think it is providing an off-chain legal structure which is protecting investors much better than other structures do in the past, and it's also utilizing much more of DeFi than other offerings, with building it on Centrifuge, creating a Centrifuge pool. And the details here on the first is the structure itself is a regulated fund on the British Virgin Islands. So something where regulators really regulating the fund. The fund is registered, and it is a financial instrument in itself. And the second thing is the fund itself is tokenized, novel instrument you can do on the British Virgin Islands, so that holding a token is comparable or exactly the same as holding a share in the fund. So the token itself is a claim and provides ownership in the fund, which is important to understand. So it's not just, you know, an accounting unit you have in your wallet. So that really gives you, holding the token gives you a fund share and real shared ownership of the fund. And last but not least, I mentioned it already, it's built on Centrifuge. So the entire pool, its tokenization will be built on Centrifuge, and the assets, the pool it's holding, so assets under management, the treasury bills, we talk about it a little bit later, they will be tokenized, will be turned into non-fungible tokens. So every tranche of T-bills with its specific characteristics, interest, purchase price, maturity, etc., also then later updated when sold. The price actually we could get on the market, and then how the asset had paid back. All this life cycle is tokenized, represented by a non-fungible token on a Centrifuge chain. The Centrifuge pool of the Anemoy Liquid Treasury Fund is pooling those NFTs, is creating an NAV, and the NAV is pricing your fund share, you know, so that you basically hold a share of a fund with a blockchain price which is updated from the NFTs representing the T-bills. Stopping here, that's maybe a little bit difficult. Pretty sure you may have questions if you're not so familiar with what T-bills later, but how Centrifuge works and then Centrifuge pool works. If not, anyway, Orhan, please check the chat for me, interrupt me when there is a question. You can also just, raise a question in the chat, no worries. I think, where did I stop? The tokens. Yeah, so the tokens itself, the fund shares, there are comparable as ERC20 tokens. You can invest on Ethereum. You can directly invest on a Centrifuge chain. You can, in the future, invest on more chains. Who has joined the active contributor call yesterday may have learned already a little bit more about future chains to be supported. Also, I think the RWA Summit, I think the DAO will held with the broader DeFi RWA ecosystem at September 19, already public announced, will also provide more details how that will work. So I think one of these kind of improvements or actually things we gain from using Centrifuge is also step-by-step providing or accessing liquidity on different L1s and L2s in the future. Here already a few base Arbitrum, etc., being named, but it will be more over the time. So super interesting for investors that they can actually stay in the ecosystem, can use their stable coins where they hold them and invest in a single pool with global liquidity. Yeah, the treasuries itself is something where we maintain a portfolio where the US treasuries we are holding have a maturity of a maximum of 6 months, so 6 months or less. So the average maturity will be below that, but anyhow, secondary markets give you daily liquidity. The daily liquidity is something where, of course, you can log in a redemption request using your wallet, using the Centrifuge app at any time, 24/7. But the redemption itself is relying on TradFi infrastructure, so US banking days, the broker-dealer we are using, etc. So it will take a while. I guess, the 8 hours is the most likely case. The 48 hours is something where you log in a redemption request on a bank holiday, etc. The little kind of, footnote here, not more than 7 business days. That is really for the extreme scenario. I think, Mark, you have asked already a few questions in regards to that. Up to you if you would like to discuss it now. Mark, if you have more questions here, happy to jump in and provide more details here, or we just continue and do that later. Up to you.
There is another question in the chat, Martin, that says...
cool.
I can read it out loud. Do you want to ask yourself, Harvey, or do you want me to read it out loud?
I guess I'll jump in. So I would love to hear a bit more about how exactly will these the shares, the onchain representation, because I think you mentioned these are NFTs, right, as opposed to different number of fungible shares, right? How would they be priced? And can you take us through maybe the process of pricing this stuff from, all the way from fund admin or even from the custody provider to the on-chain price? How is that arrived?
Absolutely. It's maybe good if you just move a little bit ahead in the slides. Sorry for jumping back and forth, but I think it's an important question. So how it will work is you as an investor here on the left side, of course, go through an onboarding process. Your wallet will be allow listed finally, and then with the wallet on your preferred L1 or L2, being connected to the Centrifuge pool through the Centrifuge app, is then accepting your investment in USDC. The USDCs will go into the pool. They will go to Circle. Circle is off-ramping them to US dollars. It goes through via a bank account to our prime broker, Celadon. Celadon is purchasing T-bills with a maturity of not more than 6 months. This, when we get the trade confirmation, of course, the T-bills itself goes into custody here with Wedbush. And Wedbush is our custodian for the T-bills here in that fund. But Celadon is providing us, of course, the trading details, is confirming the trade, is coming back with the price, and then we are minting the NFT, exactly reflecting the packages of T-bills we had acquired with the investor investment. These NFTs updating the NAV of the pool, updating the share price, and also the new shares then will be issued to the investor. So newly minted shares to the investor. Does that help a little bit, Harvey?
Yes. Sorry, just gonna ask you. So will this pricing be like once a day?
The pricing will be, I think, updated from a market price, most likely once a day. Need to double check with the Centrifuge team, but anyhow, it will be definitely updated with every trade. Every trade is updating it, and then there will be a regular update of the NFTs itself. So how the treasury bills are trading is of course depending on the market environment. But mainly really what the Fed rates are doing. If the next tranche of T-bills is actually is providing a higher or lower interest, and based on that, of course, also the T-bills you're holding may raise and decrease in price, and then the T-bills as the shortest maturing U.S. Treasuries, of course, have the least duration risk, I would say. The duration risk of holding something which is maybe worth less in the future, and if you really hold it for, T-bills can be up to 52 weeks. We would hold it for actually at a maximum and a half. The average maturity will be something most likely not more than 3 months, usually less than 3 months. So this duration risk is very limited. What we will provide to the investors, not publicly, is of course account statements and a monthly, really manually calculated NAV, verifying that what's on-chain is correct. But the on-chain NAV will be almost real time, I think, so daily.
Yes, thank you.
My understanding.
I guess these are basically like zero coupon T-bills, right? You hold it to the maturity, you get everything back plus the interest.
Yeah, I think the big issue, the big difference is that you do not need to hold it to maturity. So even if T-bills are actually zero coupon, as you have mentioned, I think, though they don't pay interest during the life of during its life cycle, they actually pay the interest at the end of their life cycle, at maturity. That's when the U.S. Treasury is paying the interest. But this is already priced in when you trade it. So if you buy it or if you sell it, actually the accrued interest is part of the price, including a little margin and the market movements I have mentioned. But really the price is mainly driven by issuance price and the accrued interest.
Yeah, thank you.
Mm-hmm. So there's really, even, if the average maturity of the T-bills in the fund is, let's say, 3 months or a little less than 3 months, we can at any time sell and buy treasuries, and anyway need to do that even if there's no investor. When a T-bill is maturing, reinvesting the idle cash again into the new T-bills, basically.
Yes.
Oh, sorry, Harvey. Go ahead.
Oh, yeah, sorry. Just I just want to see how do you guys approach this, right? So let's say that in an extreme scenario, the Fed has to increase rate, huge to, I don't know, a one-time 300 basis increase of rates, right? And that would obviously impact the market, even if you're 90 days maturity, right? Like, what happens to the price? Have you guys, I don't know, model this out? Like, what would happen to the value of the holdings if something like that extreme to take place?
Yeah, so if you hold, I think, longer maturing assets, you can get into real trouble. That's what actually has happened during this little US banking crisis, so Silicon Valley Bank and others. This short-term maturing T-bills, first of all, 300 basis points is very unlikely. Haven't seen it yet, at least maybe, in the 1930s, but not recently. So I think if we talk about interest rate changes, we talk about 25, 50 basis points. One thing. The second thing is also that where you can level out the portfolio, kind of looking at the market, I think already one idea. The second is most likely then long term, especially if the fund is increasing in size, just also dramatically reducing the maturity of the average maturity of the underlying T-bills again. That can be a strategy. Where on the other hand, what you're doing is limiting the duration risk, but maybe kind of having less exposure to the opportunity on the other end. Hey, if 300 basis points is a scenario that can go in both directions, so that could go up and down, and if the interest rates are going down again, and we are holding treasuries with still higher interest, of course that is to the benefit of the investors. The risk here is really on the side when the Fed is raising interest, especially then on newly issued T-bills. There's another few more questions, I think.
Yeah, there are two questions. Alex was first, and then there's Paul after. So do you have time for more questions, Martin, right now?
Absolutely, yeah.
Alex, go ahead.
Hey, thank you very much. I love this presentation. I have a quick question though. When it comes to T-bills reflected on-chain, pure on-chain solutions are really like Ondo, Matrix Doc, and Open Eden. And of course, all three of them currently geofence the United States' geography. And if you are a US person, you are not, for the most part, allowed to buy it unless you fall under that, like the 506C and accredited investor status. Now, the question that I have is, I believe on one of your slides, you wrote that these T-bills are available to non-US professional investors. Is that correct?
Exactly. You read it correctly. Just going back in the slides, it's open to non-US professional investors, and that depends on the nature of the fund, how it is created. It will be more broadly opened later on, but as it is created, it's open for basically then Reg S non-US professional investors, and also reflected by the minimum investment ticket size of $100,000.
Got it. Perfect. So you do have a plan to open it to United States, but sometime in the future.
Not necessarily to the United States, most likely not in this structure,
okay.
But to a broader number of investors.
And what do you think, like what are the barriers that exist for you to offer it to the US, you think?
It's how you register it with the SEC is just a very lengthy process,
Right. Okay, perfect. Thank you.
And my question was answered, so thank you.
All right, Paul. All right, no more questions for now, Martin.
Awesome. Yeah. That is a summary. That's just summarizing, what I have mentioned before. So really, the token gives you direct ownership. You can redeem at any time. Centrifuge is providing you the investment visibility you may miss with other offerings, because you really can track and trace the underlying and held US Treasury bills, and it is end-to-end regulated. Comes maybe with a few restrictions compared to other offerings, but at least is also removing the regulatory risks. So I think investor protection is one thing. The other one is really being protected from regulatory risks, so that actually, because the fund or the structure itself has flaws, regulators closing it and freezing your funds is something which is not very, very desirable. Yeah, I think we tapped into that already, so I can skip that slide, I guess. That's just, the yield curve. Interesting enough, now public bonds like US Treasuries really yielding more with shorter maturity than with longer. Traditionally, it was exactly the other way around. As longer a public bond is maturing, actually as usually as higher the interest is, but under the current circumstances, it's exactly the other way around. And this duration risk we spoke about already had already put a couple of investors like US banks in dramatic situations. Yeah, this shall we talk about this again? Any other questions for the flow? I think I kind of, went through that already. So you can invest USDC on your local blockchain, as long as Centrifuge is supporting it. You have a global liquidity pool for the treasuries, and the parties we are using here is really Celadon as a US regulated prime broker, Circle. Also, everyone knows that, to on and off ramping the stables, and Wedbush to hold the fund, the T-bills under custody. One of the interesting things is maybe that you can even do, a worst case scenario, do in redemption in kind. So you can even go as a fund investor, you have ownership in the fund, go in an extreme case to the custodian and actually ask for a redemption in kind. That means the treasury bills. That is, some of these things, they come with a structure, and are most of the other structures, you wouldn't even have access to the T-bills at all. You do not even own through the structure, the physical asset, Yeah, just kind of, putting it here all together again. Any questions so far? I think we didn't really touch on the redemption time, Mark. Maybe a good time to discuss this now.
Yeah, sure. Makes sense, and appreciate that 99% of the time it's going to be less than 48 hours. I think definitely that's what it should be. The only thing that I would suggest for lenders to negotiate, or for you to consider, would be, if it does take more than 48 hours, would you be receptive to waiving the redemption fee? I think that's one place that could make that stronger. But again, like 99% of the time, this isn't going to happen. And not every lender to this pool is going to be that sensitive about it. But I know certain folks could be in stress scenarios. And so I don't know, maybe that's one way to make it more appealing. Maybe people don't care about that at all. Yeah, that's just one suggestion here. But yeah, I think 48 hours for T-bills redemptions most of the time is reasonable, makes sense. But yeah, I would propose the fee waiver if it does take more than 48 hours. So just something for folks to think about and consider, just to disincentivize that from happening.
Super good idea. Thank you, Mark. I take it away and come back with an idea if that is something we can do. Yeah, so really the 7 days is really to keep us prepared if we look back to the structure that one of those things do not work and need to be replaced for whatever reason, so we do not know. We have seen the strangest things already if it comes to tokenized assets already, and kind of USDC depegging to I don't know, one of the service providers is stopping to operate with us, and we need to look for an alternative to the US banking system having issues, etc. So that it's really, we think 7 US banking days should be good enough to really settle and solve those things. And if that's not the case anyway, then you can go after us and have actually the solid legal framework protecting you. And it should be rather at the 8 hours than the 48.
Martin, there's a question from Alex.
Mm-hmm.
Go ahead, Alex.
Thank you. If I may jump in, again, this is actually a technology question. So I saw that you're considering launching first on an L1 and then I believe Polygon and other L2s. I am wondering, and maybe this is a joint question for you and Centrifuge as well, but how does the fund, like what criteria are the most impactful for you in deciding which chain to deploy on?
Honestly, I have no idea. That is a question to the DAO. Also, we do not control that, to have no burden that. It's just, we're using the infrastructure. And then as soon as Centrifuge is opening it up to another chain, happy to welcome investors on those chains. But do not control that. We may be able, with the momentum and how we be able to attract investors, to kind of, create demand, and the demand is convincing the DAO to vote for, changing plans, prioritizing a chain. But I don't know, maybe someone here in the call has an opinion. But I think that's the token holders, the CFG token holders.
There's another question in the chat. Ivan, you want to ask yourself?
Yeah, my main question is, who are your target investors, size, region?
Of course, I think Alex clarified that already. Non-US and professional investors means investors who can invest the minimum ticket size of 100,000 US dollars. In most of the regions, a professional investor definitions may vary, you know, from jurisdiction to jurisdiction. All the investors need to go through KYC, AML, and part of AML, anti-money laundering checks, is of course that the investor is not on a sanction list, that the jurisdiction, the country of residence, citizenship is not sanctioned. So these are just the typical restrictions, you know, that it comes with a solid legal framework that really we are following here, TradFi rules, but use DeFi to trade it.
Thank you.
No more questions.
Any more questions?
I think like one clarifying point is just to offer up that it isn't necessarily designed day one as a retail offering, right? And so like that 100K ticket size is, you know, a little bit subject to conversations directed by and between Anemoy and potential investors, as opposed to just being like a minimum ticket that you and your mother would write in from a non-US jurisdiction as an accredited investor, right? And that's part of the professional designation. This is Colin, by the way. Sorry, I know my phone's not linked.
Yeah, thanks, absolutely. And the professional investor definition is not just the amount. That is exactly right. Typically, it's really clarifying that the investor know what they invest in and understand the offering based on their experience, so that they know what US treasuries are, T-bills are, what the blockchain is, what a stablecoin is, etc. And a few of these things like, hey, you need a stablecoin to invest, you need to connect your wallet to invest. So a few of these things are actually part of how the mechanics of the offering are working, but others are not, you know.
Yeah, and Alex pointed out in the chat that most capital in the world is institutional, and like, you know, generally acknowledge that. I think when you're talking in like a DAO format where you're actually interfacing with individuals, sometimes that gets a little bit lost in translation. So just wanted to clarify that the customer tickets that we'll take are as large as the customers would ever like to give us. And jurisdictionally, just making sure that we're, you know, adhering to reasonable and, you know, possible kind of AML, KYC restrictions, et cetera.
Exactly. Yeah. Any other questions so far? I'm not sure how we continue here. I guess it is more a question to you, governance. Orhan, what do you think? What is the next step?
I was actually going to ask you if you could clarify, but yeah, makes sense.
But I would like to ask,
I'm
not sure if you know, to actually ask the DAO to approve our proposal and then kind of, you know, start to deploying the pool and make it available to investors, you know. So that's of course a plan we are having already in discussions with the investors. The fund is about to approve, so it's most likely very, you know, in the next couple of weeks, very foreseeable future. I think we would like to have it available on Centrifuge.
Yeah. Just to, yeah, there's going to be an on-chain vote where all the CFG token holders are going to determine whether this will launch or not. So we will announce it once it is live. I have no idea when it's going to be, but once it is, we will make sure to advertise for it so all CFG token holders can participate in the vote.
Cool. Yeah, I see. I don't know. I most likely give you some time back if there's no other questions. Maybe, you know, ask them now or do that offline. Send me an email or reach out to me on Slack or whatever, and then we can still sort it out. No worries.
Yeah, just want to add, like, this is the first time that we are doing it this way with a POP for it to be determined by CFG token holders. So we are writing history here in a way. So all excited to see how it's going to play out, but we will definitely, from governance side, make sure to keep you all informed.
Thank you. Yeah, also shout outs to the credit group, Mark. Thank you to the Centrifuge team to helping us here from you know, platform DeFi side of things, and the governance team here hosting the pool party and helping us through the pub. Thank you all.
Thanks, Martin. Very excited.
All right. If there are no more questions, thank you everyone for coming. Thank you, Martin, and everyone else who presented. So I will stop the call now, unless there are any last questions. All right. Thank you for coming, everyone.
Thank you, everybody.
Bye-bye.
Bye, guys.